Welcome to Market Buzz. I'm Greg Schnell, the Canadian technician and host of the Market Buzz. Each show we do a deep dive into different industries using weekly charts to see what is happening on a long timeline. Please follow me on Twitter at SchnellInvestor, and you can also find my blogs on gregschnell.com as well as StockCharts.com. And today I want to cover off banks before the earnings, and we're coming into JP Morgan on next Tuesday, July the 14th. And so one of the big issues I have with the current state of the market is how weak the banks are. And again, one of the reasons to be aware of that is when banks are weak, usually there's an underlying problem. Now, I know lots of charts are trying to drive around that using software or whatever and staying in the stuff that's working. But anyway, let's be aware of where the banks sit before we get into JP Morgan. And so the big picture is the market bullishness continues. Actually, we should say the Nasdaq top 20 continues. And the rest of the market's kind of been grinding sideways since early June. Call it June the 8th, I think was the top in June, and we've been trying to work through that since. And commodities are trying to rally along here with some good news out of China, and that definitely helps because China is good for global growth, and so we'd like to see that rock. The big question we have to analyze here is the overall market picture, and I got lots of good news on there, and I just have to tell you I have this uncomfortable pit in my stomach, but that's what makes bull markets keep going up. So anyway, the gregschnell.com website has changed a lot. If you haven't been there, I'd encourage you to step over there and take a look at it. Lots going on there. We're trying to broaden it out quite a bit. And if you're interested in any of the subscription stuff, I'm going to tell you this only because I've started up, I'm doing a bunch of speaking here. I'll explain in a minute. And also we just had the July 4th sale. So if you're interested, this is all the things that you would get: a weekly newsletter, weekly video, monthly recorded conference call, trade setups, at least 5 per day. And we also have other stuff going on there, but those are kind of all the constants. So this is the Independence Day sale, and if you use the coupon code DAILY5 here, that'll knock off over 40%. So that would be good, and that's on the annual membership. I am speaking on tomorrow, Thursday, July the 9th, at the Money Show. And this is online, and you can go there and just sign in. There's 2 full days of investing. This is the Canadian Money Show, but there's lots of good international speakers there, and it might be nice to get a little international perspective. So anyway, I'd encourage you to follow that. I'm on at 10:20 in the morning. And then for another event, this is the following week, and this is on Tuesday, July the 14th, and that would be, I'll be speaking at Wealth 365, and you can go to summit.wealth365.com to register for that. And feel free to follow that link. Thank you. And then with StockCharts, we've got a big presentation going on for the entire next week, where there's going to be multiple shows during the week of people charting their outlook for the second half. And so I'll be presenting in one of those, and I'll also be presenting on the Saturday in a live panel discussion where we toss some ideas back and forth. And again, that will be at noon Eastern. So lots of different perspectives for the market, and if you're interested, I'd encourage you to come in and check those out. And as always, thanks for watching our shows. We put them together for you, and so we appreciate you taking the time to follow up with these. I want to start with the Nasdaq, and the reason I want to start here, this is the Nasdaq composite, is one of the things we saw is in December through February is we saw the same pattern, and I just couldn't help but see it, and so I thought I'd show it to you. So we had this dip in early December, and then we had a really nice long run, and then we had a couple of red bars show up in late January, and then we went on our final run. And then the market started to basically break down towards the end of February. And as it did, it rolled over quite hard. and it didn't really give anybody a chance to get out, right? This prior high before the drop, it pretty much gapped across that, and it just kept falling, and people were down 35%. And now we've had, so this one matches this one, a big long run. This one matches this one, somewhat of a rally, and another red candle shows up, another red candle shows up, and now we go on a run. Now the real question, the real question that we have there is, are we done the run? Do we have a little bit more to go? There wasn't a lot of panic on Tuesday's market decline. We did get an outside bar, and on Thursday, the previous weekly close, we also had pretty weak action where the market gapped up really high, it tested higher, and closed very near the lows. And then we opened this week by gapping up and trying to hold that, and it was okay. But now we have an outside reversal bar after this big gap up, and again, we've just broken out through the prior high. So I'm a little bit leery here, and I'm really leery because of the banks. They make me very, very nervous. If I go show you the PPO for the weekly charts of the Nasdaq 100, and I could just, let me go get that for you. I think I might have even have it saved, but actually let's just try that. So one of the things that we get is the Nasdaq 100. And on here, this is a daily. I'm going to jump over to weekly. But what I want to show you is that the PPO is up at a high level here. But how high is it? It's at 5.3%. And so we're just going to go down here and put a horizontal line on this at 5.317. And I'm going to just do the line in blue. And what happens when we put that line on here, and so that's this line here going across. When we take that back 20 years, this is pretty amazing. We are now at a level where we only got to once here. This was in 2009. Which is good, and 2003 coming off the lows. And the market rallied hard up to this level, and then that was kind of maximum momentum. Now the market continued to climb in both of those cases for quite a while longer, so that's the really positive news. The other two examples, the market did continue to climb. It's a little hard to show all that with everything else on this page, so let me just get rid of a few of these things and update the chart. Get rid of a few more. Let's get rid of the full stochastic. It's not going to help us much. And the volume has been huge lately, but I'm going to take that off too, because I just really want to define this point of how high the momentum is. When you have big bullish momentum, it's really hard to stop the market. So that's one of the real positives of where we're at. Okay, we got that all set up. One more thing to do. We're going to adjust the height so it's the same size as the actual panel. And so this makes it a little more obvious of how high that 5.3% level on the PPO is. And one of the nice parts about using the PPO compared to the MACD is it's using a percentage change, and the MACD uses the actual price value. So as the market price goes up, the waves get bigger. So in this case, in this way, we can use the PPO to help compare over time. But clearly, the only other times that we've had a massive rally this big was in the 02-03 coming off the lows, and in the 08-09 coming off the lows. Now, one thing I'll say is we've got a lot higher starting point for momentum, so that's another clue. And the Fed jumped on this pretty early, right? So the Fed put in money well before most of the other central banks, I think, were aware of the problem even starting. But with all of the money that came forward very quickly, most of the central banks have now participated. So we have this big rally that's built. And the question I have is, can it keep going? And obviously, coming into the earnings season, and I think we know the second quarter earnings are going to be weak, there will be a lot of software companies that are going to be able to surprise us with new higher earnings levels, which will be very bullish. But on the other hand, we've got a lot of the economy, and I think they're projecting almost 40% of the profits of 2019 to be gone. So with that, it'll be very difficult to see. It seems odd that the stock market could hit new highs, and yet we have 50 or 40% less economic prosperity for the companies that are involved. Anyway, all that adds up to quite a confusing place. So I have a few more charts that I want to show you, and I want to show you these, one, because it's part of my subscriber package, give you an idea of what I show the subscribers. But the other thing is the real question mark that we sit at today. So this is my Schnell strength indicator, and I should just increase the chart size a little bit here. Let's make this 1250 just so it's taller. But what I've done is every time the market, so my strength indicator, what happens is it rallies up, and then as long as it stays above 75%, you want to be fully invested. And then as the market starts to fall away, it's not a bad clue to at least be defensive. Now, over here in 2020, what happened was the indicator got weaker, but the market just kept going and going and going. And then finally, when it let go, it literally toppled from a much lower level. So we didn't have very much market participation. Last week, on Friday, we closed down at 84%, which is still very bullish, and above my 75% level, which says stay invested. The first 2 days this week, we've rallied up really, really hard, and we've come up and we're at 96% over here. And sure enough, after Tuesday's close, we're at 97%. Boom, really high. I think what's important is this wave, much like I just showed you from the Nasdaq composite itself, how we had kind of a matching wave pattern in terms of the market correcting and then going on a final run. And that was here. Well, during this final run, it can be very, very profitable. This also happened to be an earnings quarter, which was April, and now we're entering the July earnings quarter. So I'm very interested to see how the market responds, but it's this second wave that makes me more interested. Have we just seen kind of, market starting to decline? It goes on a final run, just gets everybody reinterested as we head into earnings. And so that's one of the things that I'm watching for, and that I'll share with my subscribers on a regular basis. We try to make sure that people know if the market's getting soft here, that it's time for you to get out. Now, the one thing I will say in the current situation is we have the Nasdaq soaring to new highs. We have the S&P stalling today right at the trend line, the downsloping trend line on the daily chart. And we have the New York Composite stalling at the prior highs from, I'll call it mid-June. And we have this downsloping trend line, and we're stopping well before it. So for the average stock, we're not getting back anywhere near the trend line. For the S&P 500, we're getting back. We got up to the trend line, and we've stalled so far. And for the Nasdaq, we've just gone ballistic right past it like nothing else matters. And so there's really three different market types, and unless your portfolio is pretty much in this one, you haven't made any money in June, and you're holding sideways. So pretty important to be aware of where we are and what we're invested in at this point. I think one of the bigger overall clues that we're going to have for when to leave this market is when you have some sort of macro indicator that helps you understand how smart the market, or how bullish the market, not how smart, how bullish the market is at a certain time. And then as the market starts to weaken underneath the surface, you'll still hear about some stock going to the moon. You'll still hear, about something else going on. So all of a sudden Walmart was a really big rally today. So maybe that's changing the face of retail. Costco is trying to hold up there. And then we have other stuff where Tesla has actually taken over the market cap of Honeywell, as an example. So you have a company on a clear growth trajectory compared with a big, wide, stable company from many, many years of products and technology, and it dwarfs it all of a sudden. So we really have this mixed situation, and again, we have this economic backdrop which is so weak. So part of the difficulty in analyzing the market here is remembering what we're analyzing. If you're analyzing the top 10, they're still going up. If you're analyzing the top 500, they're actually making a lower high currently, and that's at least just to be aware of the current high recently. You're still below it. And then in the case of the New York Composite, which includes a lot of different stuff, clearly the uptrend line is broken. We've made a lower high and a lower low, and now we've made this brief little high here, and it's roughly at the same level, slightly higher. And do we start to break down again? So we're at this inflection point as we head into earnings, which is the reason that I wanted to cover off banks today. I could have jumped in and covered off these internet stocks that just continue to go higher and higher and higher. But it's more important, I think, to understand what is going on underneath the surface so you don't get trapped. And one of the nice trades, hopefully you caught some of the gold trade. I still think that's a nice trade to be looking at. One of the big ones that I'm watching for here is copper, and copper has had a beautiful run. And if you're in some of the copper stocks, in my newsletter on the weekend, I was mentioning getting involved in this trade, and we've got this big trend line coming into play. Two of them actually. We've got a giant 20-year or 18-year trend line that we're back testing this week, let's call it over the month of July, and then we have this downtrend line here at 290. And what we need to know is, are we going to be able to hold here and break above that? And that would obviously be very bullish, and China's a big buyer of copper. Or do we fail here? And copper as an economic activity indicator for the globe, I think it's pretty important to understand what the message of copper is. I will say that we broke so far, this is a weekly chart and a line chart. So by Friday, we need to see where this is going to close. Currently, right now, the relative price move is so strong that we're up above the previous 2 years range in terms of the RSI price action, and that's very bullish. And getting up to this 70 puts us in what we would call a new bull market, and then we would just keep rallying higher. Whereas if we stall here and end up dropping back a bit by the end of the week, then the question is, are we still in a market of lower highs and lower lows in a bear market? And this was literally just a bounce off the bottom, a very big bounce, but we get up to this line and we fail. Lots of risk here for us to be aware of. So all of these things are coming to a conclusion or to a head or an inflection point. And I have to say it's very difficult to call either way. Again, my Schnell strength indicator is screaming bullish. It's sitting up here at 96%, suggesting stay invested and things are fine. When we go, and I want to do that, when we go to the banks, we'll talk about them specifically. But here is an example of, this was the price change from Tuesday. The best stock, market ended up selling off a bit, but the best stock in the group was up 1.8%. And if we go back to, if we just reverse it and see what the losers were doing, you have an Italian bank down 5.5%, a Chinese bank, that doesn't make much sense to me, but it's down 5.5%, albeit the price at 37 cents. So really hard to use that. Banco Santander, I think we know the problems in Brazil with coronavirus, and they're down 5%. ING is a Dutch bank, down 4%. And then we see some big American banks in here. Regions Financial down 4%. Huntington Bank shares 4%. Fifth and Third, Key Corp, Zions Bank Corp. Really big moves down here in the 4% range. Wells Fargo down 4%. Goldman Sachs down 3.8%. Scooter ranking on Goldman Sachs is at 48%. You would think if we're about to break out to new highs here, for the S&P 500, take out the June highs and keep going, I'm expecting that the rotation would start to move into these big names. That's not happening yet. So that's a real question I have. So here's JP Morgan. And again, they report on Thursday. And one of the clues that I want to watch for. So first of all, if we use the endpoint of Tuesday's close, what we're going to see is we're sitting here and we're kind of missing that point. So if I draw it in line so the connection is between here and here, that puts us down here, and we could use that. Let's just say that's going to work. The second thing we could do is we could change this to a line chart. And again, line charts just give you the final Friday close. And so if we were to do that, we'd put a whole different line on this chart, and it would be a little flatter. Something like this. But we're going to end up on next week, I would say, testing both of these conditions for JP Morgan on Tuesday. So if we get support at the $90 level, that's critical, and that works on a weekly line chart and on the intraday charts where we've used the bar charts and actually used the lows of the weeks to mark that. If that trend should break on one of the largest banks in America, or in the world, if that trend line is going to break, that's a pretty big deal. And I think that's an important place for us to watch for. I still think JP Morgan's a very well-run bank, obviously, and they do, they've got a lot of pressure on them for carrying the load in terms of momentum and that kind of thing. That chart is 5 days away, and so we really need to see what's going on. And when we turn it into a 60-minute chart, this has been the price action since the 9th of June, and you could just see JP Morgan's going nowhere, and right now it's just settling in this level. So it doesn't really give us confidence that there's an upturn coming on. So as the market's been grinding higher all through June here, the banks have not followed at all. Now, we could just say, okay, well, no big deal. The banks get to see everybody else's bank statements, and they get to see what's going on inside the company because they're loaning money to them. So one of the questions I have is, are we going to get more support from these banks? Will the market continue to just solidify around the tech names and sit there? Or if we start to sell off on the banks in a meaningful way and start to take out some of these bigger picture lows, let's just go back 3 or 4 months here, and we start to break through these trend lines, are we going to start to see some meaningful downside moves on the banks? And again, there's a whole group of them here. Looking at how badly they got hit on Thursday or on Tuesday is a big deal. If we go to, I'll call it 1 week and just say percent change, some of them were down 8% and some of them are up 15. This is Commerce Bank, new CEO, I believe, at Commerce Bank this week. And so maybe that was a change of CEO, but what we're watching for is just how are these banks going to evolve over this earnings period. Okay, long detailed story, but let's just quickly sort the charts based on the Scooter ranking, so the strongest charts first, and let's jump in and take a look at those. We're not going to spend a lot of time at them, but so here's MSCI, and it continues to move to the right-hand corner. That's not really the type of area of the market that we're worried about. Moody's again, credit data, that chart's up in the top right-hand corner, very bullish. Equifax, same thing, credit data. A lot of people needing that right now. Nasdaq, which is the provider of data and trading. And here's Deutsche Bank. Now, Deutsche Bank has tried hard to move up. The February peak was at $11.16. It's sitting at $10, and it's trying to rally. Again, the chart's trying to get there. The real question is, can we make any progress? BlackRock, sitting up here, can't get through these prior highs. 554, 568, 567. We're just hovering in this area around the 550. We closed at 549, so back below this 554. It's a real question, and this is obviously one of the better names out there. E-Trade Financial, Scooter ranking is sitting up here at almost 80%. It's trying to get through, I'll call it 18-month highs. There's one single spike here that goes up quite a bit higher and then breaks back down. But you can just see that $50 level, pretty important for E-Trade. China Construction Bank, same thing here, 85 cents. Let's move on. Bank of China Beijing, 40 cents. Let's move on. T. Rowe Price, you've got $120 level in the stock. That was 2 years ago. and it's sitting just 122.96. So we haven't made a whole bunch of progress here. What we're really watching for is, does it make a lower high and roll over right near the 0 level? Okay, and again, these are the stronger ones in terms of scooter ranking. Here's UBS trying to get through this $12 level. That's been a problem for 2 years. It'll be a real tough question to see if they can do that on the back of coming through the earnings period here. Morgan Stanley made its high on June the 8th like everything else, and then $56 was the high in January, 51 June the 8th, and now we're sitting here at 47. Not a big drop off. We're still above both moving averages, but that's the real question, is can we hold there? PPO is flattening out right near 0, so that's not that bullish. Intercontinental Exchange, again, exchange trading just kind of stuck here in the same level for a year. So the point I want to make is these banks don't seem to be showing the turn that we would expect to see if we're going to start to break out to new highs. Here's the downtrend for Commerce Bank, and on here you can see the $5. So they rallied big this week on the back of the new CEO. I think the real question here is, that $6 level, probably got to get above that. Here's $5.50 on the bottom side, and we're kind of testing that right now. But really important levels here to watch to see if the banks can get through. HDFC Bank, you could just see stuck here at the $50 level. That's right in the middle of the resistance all the way along here. Royal Bank of Canada stuck under the 40-week moving average at $70, and that's also horizontal support and resistance. So from a technical perspective, we're seeing this blockage in a lot of places. Here's Goldman going back 3.5 years around the $200 level. It really needs to hold that if it's going to maintain its breakout. Intesa Sao Paulo at $12, stuck at that resistance level. We covered this off, I think, 2 months ago. I went through these bank numbers. Canadian Imperial Bank of Commerce, again, not getting back up to the prior high, so that's kind of a big deal. We also have the issue of this $70 level coming in. That's 2 years of support, so now it's acting like resistance. And Allied Managers Group charts down and to the right. SVB just chopping sideways. I don't know why that one's set up differently. Credit Suisse at resistance. We see this over and over and over. So from a technical perspective, what was support becomes resistance. Very difficult to get back through here, and that's what we need to see. All of the people who bought up here are currently losing money. So as soon as price gets back up here, they're tempted to sell to just get their money back. State Street. Choppy chart, moving around quite a bit here. Dropped very quickly from 84 to 41, down 50%, bounced back up to the 40-week moving average, and we're sitting there. BNP Paribas, French bank, right at horizontal support resistance. Mizuho Financial Group out of Japan, horizontal resistance over and over and over. Here's TD Bank out of Canada. So again, the point isn't to scare you, it's to draw your attention that all the banks are paused here at an important inflection point, and Jamie Dimon and the team are going to kick it off on Tuesday, trying to give us some hope that we can move forward. Be very cautious. If that doesn't work out well, we probably have some bigger market wins ahead of us. Thanks for taking the time to join me on Market Buzz. Market Buzz airs Wednesday at 10:30 a.m. Eastern. You can also see the recordings on StockCharts TV YouTube page, and go over to my website. Hopefully you'll find something there. The big thing I want you to remember is checking in on some of those presentations coming up, and hopefully you get a chance to register for them. The first one is on Thursday. The next one is on Tuesday. Please jump in and sign up. Thanks. Bye.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're going to bring you daily content from an incredible collection of technical analysts and financial experts.